Getting the right car insurance is a bit more involved than finding the lowest price. It's important that you get the right coverage for your situation. And first, you need to understand what's available. There are 5 main categories or types of auto insurance coverage. Let's go through them. Liability coverage is the most common because almost every state requires you to carry some minimum amount in order to drive legally. Liability coverage pays for the damage you cause in an accident when you are at fault. Specifically, liability coverage will pay for bodily injuries and property damage of others. Remember that liability insurance does not cover any of your damages. It protects others from damage you cause and also protects you financially. Without it, you can be on the hook for the entire cost of an accident out of pocket. Collision coverage is the second most common type of car insurance coverage. It will pay for damages to your car from an accident, even if you were at fault. As the name implies, collision coverage pays for damage incurred when you're driving and collide with another object. Note, losses from non-crash stuff like theft or weather damage are not covered by your collision insurance. For those things, you'll need something called comprehensive coverage. Comprehensive coverage kicks in to cover losses that are totally out of your control. Like collision coverage, comprehensive coverage is optional. It will protect you from losses due to fire, vandalism, theft, hitting an animal, or damage caused by certain natural disasters. But comprehensive coverage won't cover everything. For example, most policies will not cover damage due to freezing, even though it's weather-related. Comprehensive coverage usually doesn't cover breakdowns either. You should find out what is excluded before purchasing. Comprehensive coverage is often more attractive to drivers of a new or expensive vehicle. Some lenders may even require comprehensive coverage as a condition of financing your vehicle. To recap, we've gone over liability insurance, which covers damage you do to others, collision insurance, which covers crash-related damages to your car, and comprehensive insurance, which covers certain unpredictable damages to your car. But what about injuries suffered by you or your passengers? If you weren't at fault, the other driver's liability coverage should pay for your damages, but you can purchase your own medical coverage for additional protection. Medical coverage is usually optional, but certain no-fault states will require you to buy a form of it called personal injury protection. Personal injury protection is also known as no-fault insurance, because like medical coverage, it will pay the cost of treating your injuries regardless of who is at fault in an accident. Finally, uninsured or underinsured motorist coverage will protect you against the risk of being hit by an uninsured or underinsured driver. It's estimated that almost 15% of American drivers do not carry the legal minimum amount of car insurance as required by their state. If you are hit by one of these people, you won't be able to collect from a liability policy they don't have. Uninsured motorist coverage will pay for your medical expenses and lost wages. Many states now require uninsured motorist coverage for bodily injury, but you might have the option to purchase it for property damage as well. Underinsured coverage kicks in when you're hit and your damages and expenses exceed the limits of the at-fault driver's liability coverage. When you're shopping for an auto insurance policy, make sure you know exactly what you're getting and why. Find out what is covered, what is excluded, what you need to stay legal, and what you need to stay protected financially.
Carriers advertise all the time to try and set themselves apart. They have to in such a competitive industry. Shopping for and comparing car insurance has never been more convenient, and consumers have a wealth of options. It seems easy enough to find a great price fast, but what about the product? Advertising won't tell you who really has superior service and who's giving customers the runaround. When you have to make a claim, your policy is only as good as the company behind it, and cheapest isn't always best. That's why you should investigate an insurance carrier before buying. Here are 3 things to check and where to find them. First, look up your carrier's complaint ratio on the National Association of Insurance Commissioners website or on your state's insurance department website. A complaint ratio tracks how many complaints are filed against a carrier per 1,000 claims submitted. Some states also publish a complaint index, which compares the number of complaints against a carrier relative to its market share in the state. Complaint statistics are often used as a proxy for evaluating overall customer service within the insurance industry. On the NAIC site, you can also find tables showing the most common types of complaints lodged against insurers, which can help put the complaint numbers in perspective and alert you to the most common industry issues. Next, check for consumer rankings and reviews. J.D. Power reviews and ranks carriers on multiple customer service factors, covering everything from website usability to purchase experience to price. They also publish rankings on claim satisfaction, as well as an overall rating by region, which combines the different factors. All of their tables are sortable, which makes it easy to see where your carrier ranks on a particular factor. Lots of other media outlets like Yahoo and the Wall Street Journal publish their own rankings. And Consumer Reports also offers carrier reviews for subscribers. After checking out the complaints data and customer rankings, the last thing to investigate is solvency. You want to know that a carrier is able to pay your claims if and when you suffer a loss. AM Best publishes financial report cards for insurance carriers, and you can find solvency statistics in them. Solvency is important, especially if you are considering a policy from a smaller or regional carrier. However, for major auto insurance carriers, solvency is more publicly scrutinized, and you'll probably find the complaint and consumer information more relevant for choosing between them. Even if you just want the cheapest minimum coverage available, don't buy it without doing your homework. Make sure your carrier has a good reputation and a solid business to save yourself from potential headaches later.